Taiwan Semiconductor Manufacturing Company is probably the best manufacturing company in the world. In addition to providing insights into its own operations, investors following Taiwan Semiconductor stock get insights into the entire semiconductor industry because Taiwan Semi is such an important part of the industry overall. It's a manufacturer that partners with companies like Nvidia, AMD, and Apple. So its health determines the health of other companies upstream. So in this video, I'm going to evaluate what's going on with the latest developments with Taiwan Semiconductor stock.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/parkev for the 10 best stocks to buy now.
So in a conference call that the company held with Wall Street analysts in the middle of April, the management team said that their first quarter revenue decreased by 5.1% in US dollars as their business was impacted by two forces. Number one, smartphone seasonality, and then number two, continued growth in AI related demand. The smartphone seasonality is understandable. Most people purchase smartphones during the holiday season, or I should say, smartphone sales are elevated during the holiday season. And so Taiwan Semiconductor gets an increase in ordering in the months heading up to the holiday selling season as its partners try to ramp up their supply ahead of that holiday season. So in the quarter just completed, which included January, February, March, that isn't a seasonally robust demand quarter for smartphones for Taiwan Semiconductor manufacturing. Meanwhile, anything related to artificial intelligence continues booming. This is now, I would say, the second big report I've seen with semiconductor demand relating to artificial intelligence. The one we saw prior to Taiwan Semiconductor was from Micron Technology, and Micron Technology said similar things. Everything related to artificial intelligence is booming, everything related to everything else is stagnating. And we're seeing the same here from Taiwan Semiconductor. The company also saying that revenue in the first quarter was slightly above the midpoint of their guidance. Gross margin was down 2 percentage points to 58.8%, primarily due to the major earthquake and the aftershocks on January 21st in Taiwan, as well as the start of their overseas dilution. And what they mean by their overseas dilution is that they've been expanding their manufacturing presence outside of Taiwan. They've invested significantly in the United States, over $100 billion of planned investment in the United States. And they're also investing outside of the United States in Japan and in Europe. And what management has told investors is that those manufacturing facilities are not as profitable or not as efficient as its manufacturing facilities in Taiwan. So as they ramp up investment and start production in those facilities, it's going to bring down their profit margins. And you might say, well, if that's the case, why are they doing it? And the primary reason management gave is that their customers want that. Their customers, their big customers, including Apple, Nvidia, and others, are asking Taiwan Semiconductor to diversify its manufacturing geographically so that they have options. And you've seen how important that is. As in recent weeks, President Donald Trump has announced and then paused and then announced tariffs on countries, on products outside, produced outside of the United States. And so these companies like Nvidia and Apple, they want to know that their manufacturing supply is secure, that their supply chain is robust, that they're not going to be exposed to that risk where, at the whim of the president, they could face a significantly higher cost of goods sold, which could make their products unviable, right? If they have to raise their price by 145%, many of their products would become obsolete in the marketplace. They also noted that their operating margin decreased by half a percentage point, but it's still very strong at 48.5%. That's one of the reasons why I say Taiwan Semiconductor is one of the best manufacturing companies in the world, because not only are they generating revenue over $100 billion on an annually adjusted pace, but they're also reporting profit margins close to 50%, operating profit margins close to 50%. These are the kind of operating profit margins that you rarely see with manufacturing companies. These are the type of margins you only see with software companies or digitally native companies with no physical infrastructure, with no physical products to sell. And so this is rare for a manufacturing company to generate this level of profitability. And so kudos to Taiwan Semiconductor for achieving these results. Now, they broke down their revenue in segments, and HPC, which is high performance computing, which is the products they sell to companies that are delivering products to the artificial intelligence data centers optimized for AI. So, this is the production for companies like NVIDIA and AMD. And this for the quarter increased by 7% from the previous quarter. Year over year, it was up a whopping 59%. 59% growth in this segment for Taiwan Semiconductor, even though smartphone revenue decreased by 22% year over year, and it now only accounts for 28% of the company's overall revenue. In fact, I like the business more now that a larger percentage of its overall sales are derived from artificial intelligence, because that category is forecast to grow significantly over the next 5 and 10 year periods, whereas the smartphone market is not forecast to grow significantly at all over the next 5 and 10 year periods. I also wanted to remind everyone of my fair value calculation for Taiwan Semiconductor. I calculated a fair value of this business at $174 per share. Its current market price is $147. And when I look at the forward price to earnings valuation of 13.58, I see an undervalued business that I have rated as a buy. And I'm going to update that rating today, April 21st, 2025. I like this business. I think there are risks, of course, but I think at current prices and its prospects looking ahead, I think Taiwan Semiconductor is a good value for long-term investors who are willing to take on these near-term headwinds for the longer-term benefits. Thank you for watching this video. I truly appreciate it. I know there's a lot you could be doing with your time and a lot of other videos you could be watching. So I truly appreciate that you chose to watch this one. If you want to see more videos just like this, hit the subscribe or the like button. They'll both help me make more videos just like this one. Thank you again.